are facing growth headwinds. How do you see growth in these countries, and how do you see India being placed in terms of growth versus the BRICs?
Yeah, that's a very good question. The BRIC nations have kind of come under the scanner over the last year or two. Growth rates have dropped quite significantly. India recorded a 5% GDP growth rate last quarter, slightly below that. Chinese growth, as we just said, has gone down a fair bit from the structural levels it was at 5 years back. Brazil, after hitting a very significant high in 2011, I think at 8%, has gone down significantly down to about 2%. Same with Russia. Clearly, there are structural issues in the BRIC economies, and I think we are beginning to see some signs of these structural issues being addressed now. For example, the entire reform package in India over the last 3 or 4 months, the effort to reduce fiscal deficit, current account deficit, and not just pursue growth blindly. You've seen something similar in China as well. The new policymakers are not unduly worried about a headline GDP growth. Brazil also, they increase interest rates. They're sacrificing growth for a more stable and a more sustainable environment. So our sense is that it'll take time for these measures to flow through in the form of higher structural growth. But it seems to us that they are on a better track today than they were last year, when they were ignoring the structural challenges that the economies were facing.
How are you reading the global commodity prices, and how do you see it impacting India and specific sectors like iron and steel and the overall consumption sectors?
Yeah, as I said earlier, we believe that the big bull run in commodities is probably over. To that extent, we are not so kind of positive on global commodity prices. As far as India is concerned, India has a significant import content in commodities, which basically means that, especially in energy, you've got tons of imports on petroleum products as well as on coal now. So if global commodity prices kind of come off, it's going to be good for the economy, no doubt. It's going to ease off inflationary pressures. It's going to allow the central bank to cut rates. It's going to ease the current account and the fiscal account deficit as well. Having said that, India does have a fair share of cyclicals in its kind of indices, So some of those stocks could come under pressure. Having said that, companies which were suffering because there was very little processing margin because of very high mining prices, they're going to benefit, at the margin, because they will get some margins in processing, as in people who convert from raw ore to finished product, So some of that's going to flow through in a positive manner as well.